Welcome back to another episode of Cashing Out. I'm your host, Billy Alvaro, with my co-host, Wayne Hartard. We are Easy Sell Property Solutions. We're located right over here in Holbrook, New York. We buy properties all day, every day for cash. We buy primarily New York, Long Island, Queens, Brooklyn, the Bronx. We're expanding out to other states like Jersey, Connecticut, Rhode Island, Massachusetts. In the future, it's all coming. Cuz, how you doing today?
I'm doing fine.
I always like talking about your hair. I see you got a haircut.
How's it look now?
Looking hot, my man. Looking good.
Slick back. You like that, huh?
I like it slick back. You got to cut off. No more Keanu Reeves. You're looking good.
I'm glad we had Les here last week. He had longer hair than me for the first time.
Yeah, Les has
Rockstar.
hair
You gotta
down,
watch.
down to his butt. I don't want to curse on the show, but yeah, Les was he was a good interview last week. We had fun with him.
Yeah, good.
Learned a lot. So today what I want to talk about, well, by the way, if you want to find us on the web, you can find us at easysell411.com or by phone 631-400-EASY. By the way, we're here every Saturday from 12 to 12:30 on 103.9 right over here on Long Island News Radio. So we've been speaking over the last couple of months and weeks about what we do. We buy properties, obviously, for cash. We also have a sister company. The name of that company is Max Returns Real Estate Investments. It's a little bit of a spin what we do at Max Returns. Max Returns, we do a couple of things. We do a lot of joint ventures with builders and with other flippers. We raise money and we give high rates of return to the people who are out there who they want to get involved with real estate investing, but they either don't have the time, they don't have the knowledge, or they don't have the expertise. You know, the knowledge and expertise basically go together. A lot of the people that are investing are retired. Mm-hmm. A lot of the people that are investing with us are accountants, financial planners, they're attorneys. They're people who are professionals, but we also have people who, you know, they have an extra $50,000, $100,000, $150,000 sitting on the sidelines, and they're tired of earning. You know, you said today driving in, you saw a sign for like 1% or 1.4%.
It said 1.45%, and it had like arrows as if it was like
for a savings account.
Yeah, as if it was like the new thing that just came out. It was like, wow,
well, that's a high rate of return.
There was a balloon on the sign right on the side of Sunrise Highway, and I'm like, wow,
it's crazy.
Shaking my head.
And people get excited about earning a little over % in their savings account annually. So we have programs meant for those people that want to invest, but they just don't know what to do with their money. They can diversify their portfolio and start investing with us, right? Sure. And we have a couple of different ways in which we do it. What I want to talk about first, Wayne, let's get into because a lot of people don't realize self-directed IRAs is something that people could invest their money and they can put it in real estate, self-directed. Now I know myself, our family members, we all have self-directed IRAs. Why don't we speak first about what it is, and then we'll give the audience a couple of places that they can call to get more information on. Mm-hmm. And then if they want to invest with us, we'll give them another telephone number. So first, what is a self-directed IRA?
So folks, basically similar to like your traditional Roth or IRAs that you have already, it's basically your money's going to be housed with a custodian. That custodian is going to oversee all of the investments, real estate investments that you want to invest in. They're going to make sure So basically, you keep in mind, it's self-directed, meaning they're not going to invest it for you. You're going to have to decide where to invest your money.
That's a key point.
Yeah.
Right? So key point, the words self-directed means that if you have your money with like a Fidelity, mm-hmm. Fidelity generally is going to invest in whatever portfolios they see fit. Mostly it's mutual funds.
Correct. Yeah.
Right? Majority of it's mutual funds. And you really can tell them what mutual funds you want to invest in, but they do all the investing on your behalf. They manage the fund, they trade it, there's no loads, there's front loads, there's a whole bunch of different ways in which they manage the money for you, but you're really not in control. With a self-directed IRA, you have to have it with a specific custodian, as you alluded to before, and you could basically tell the custodian what investments you want to put your money into. They don't give you any investment advice. You're in charge of your own destiny. You're in charge of investing your money. So this is perfect for those people who have money sitting in their retirement accounts, whether it's an IRA or a 401k, because they could convert it over to a self-directed, mm-hmm. and they can start putting that money into real estate deals, investments with us or with somebody else, yep. And they can start earning anywhere in the low side from 6%. Generally, if it's like a rental portfolio, they'll get a 6% annualized return, up to about a 12% annualized return, depending on what mortgage they're doing. If they're doing a first mortgage or a second mortgage, if it's a quick flip, if it's a long-term flip. So this is an exciting thing that people really need to realize. You could start earning a tremendous amount of money based on the type of investments that you do if you would just take your money that you have in your 401k or your IRA and self-directed. Now, mm-hmm. There's two companies that we primarily use. There's many of them out there.
Yeah, there are a few. The ones we're familiar with is Equity Trust, ETC. You could probably go online and check them out. It's etc.com, I
And
believe.
I think you and your family mostly have your money.
I use that one.
And then our family, we use Camaplan. And the only reason why we mixed it up is we wanted to see what the differences were, and they're basically the same.
They're both the same. They're very, very, very simple. If you do an expedited process, folks, you can get your money out literally like 24 hours.
Right.
It's very, very simple. I mean, they're there to make sure that all the promissory notes and all the documentation you fill out is done correctly. But it's pretty smooth. I got to be honest with you. We do it very often.
We do it a lot. We do it a lot with our own money, and we also have a lot of people that we've got to convert their money over to self-directed IRAs, and they're investing with us. And then, we have somebody with a substantial portfolio, well over $1 million that they've converted over, that they're giving us, 500, 700, up to $1 million in some cases. So the key thing that you want to be aware of is that it's 100% secured, right? You're not allowed to go out there and say anything is guaranteed, because there's no guarantee in life except for death and taxes. We all know that.
I said that last week.
Right, you said that last week. But the one thing that you need to be aware of, that if you are investing into a real estate deal, generally you're going to have it secured with a mortgage and secured with a note. And so that note states that the person that's borrowing the money is going to owe you a certain amount of money with a certain rate of return, and that mortgage actually then gets recorded at the county and secured against that property. So God forbid the people that you're investing with, God forbid something should happen, they die. God forbid. That house, you're secured. When that house gets sold, you're going to get your money out, and you're going to get your rate of return that was promised in the promissory note.
Yeah.
Right?
Yeah, it's very important, folks.
I
got to say, we encourage you. Most people don't even know about these self-directed IRAs, Bill. I mean, I encourage everybody, after they're listening to this, go take some time. Go Google them. Go do a little research on them. Most people don't even know about them. You may even ask your tax professionals, and they'll tell you that they don't exist. They can't be done.
They don't know about it.
People are almost scared of what they don't understand. We encourage you. That's why we're here. We love to educate. Go out there and actually just do a little research, and you'll realize that tons of people use these ways of investing.
Yeah. Well, one of the things back when Mitt Romney was running for president back, I don't know what year that was, but there was a big article about him on how he made tens of millions of dollars tax-free because it was in a Roth, because he was in a self-directed IRA. These are investment tools and vehicles that you, the general public, should be aware of. You should get educated on, and you should leverage them and use them to your advantage. If you're not using them, shame on you. Don't complain that you're not making money. There's so many hidden secrets out there, and it's only a secret because they really don't know about it. You said before, a lot of the investment people their accountants might not know about it. No. And if they don't know about it, they're going to say it's either fraud or it can't be done.
Can't be done. I love that one. Yeah.
It can't be done. It's not possible. I'm telling you 100% it is possible. There's no fraud involved with it. This is 100% ethical. It's written within the IRS code. Now, there's certain guidelines that you have to follow. You can't invest your money with a family member, right? You can't go, what's the rule? You can't invest from mom to dad or dad to mom.
Yeah. But it's a certain lineage. But then you can do brothers and sisters, and you can do aunts, uncles, and cousins.
Right.
So you just got to look. You'll see it. There's a lineal tree they put on the website for it.
You also can't invest your money into your own deal, right? So if I'm buying a property inside my corporation name and I have money in my own IRA, I can't use my own money to invest in my own product. It's one of the things that the IRS says. It's called self-dealing. You can't do it. But besides the things that you can't do, there's multiple things that you can do.
So many things you can do.
And you can also invest in you can invest in gold. You can invest in silver.
Yeah,
you can invest in commodities like that. So if you're interested in finding out more about the self-directed world and about the IRA world, and you want to have just a simple conversation, a cup of coffee, listen, this is not a sales tactic. This is not any sales pressure. If you want to see what this is about, first of all, do your research, go online, look at Camaplan, look at Equity Trust. If you want to see what we have to offer, give me a call at the office. I'm going to give you a different number because this is going to go directly to me. It's 800-793-5015, extension 100. Give me a call. You'll get my voicemail. You'll get my assistant. Leave me a message. Let me know what you want to talk about, and my assistant, Georgina, will get back to you, and we will set up an appointment for us to speak about the world of self-directed IRAs and self-directed 401ks, because it's an exciting world. Why would you not want to earn 6, 8, 10, or 12% on your money on an annualized basis? Why in the hell would you want to put it with a mutual fund that you're gonna, if you really look at the mutual funds and you see you think you're making 8%, after you take out all the fees, you're lucky if you're making 4.5 to 5%.
Yeah, very very volatile.
It's very volatile. And you're at the mercy of the person who's trading your accounts. Yep. Makes no sense.
And the mercy of many companies you don't even know anything about, folks. So you're self-directed. Think about this. You're gonna know the money's gonna come out, and you're gonna invest in 123 Smith Street or whatever it may be, that particular deal. You're gonna see it. You're gonna drive by. Tangibly, you're gonna drive by, see it, see what's going on. You're gonna know what it's at. Think about some of the mutual funds you have money on that you have no idea what's going on. Somebody sneezes overseas a little hard, and all of a sudden your money is gone.
Yeah. Listen, right now, we're not going to fake it. Right now, the stock market's going crazy.
Doing well.
But when it crashes, and it will, and people's wealth gets wiped out by 50%, you're going to go screaming. You're going to wish you had your money reinvested or diversified, rather.
Sure.
Right? You have to diversify.
Is very important.
It is. This is Billy Alvaro, my cousin Wayne Harta. We have a company called Easy Sell Property Solutions located right over here in Holbrook, New York. We also have a company, Max Returns Real Estate Investments, and that's primarily what we're talking about today, how you could earn high yield returns on an annualized basis investing in real estate. We'll be right back right after this message.